All right, well, let's jump into the retail sales are still surprisingly strong because although the labor market has been softening and consumers say they are worried about inflation, people are still spending money. August retail sales, and this was just shocking to me when it came out, they were up 5% compared to last year. And if the annual decline of 0.7% in gasoline stations, you back that out, sales would have increased by 5.5% compared to last August. Where are people getting this money from?
I mean, people are definitely spending money, and
Yeah.
I forget. We're talking to a client actually the other day, and he's like, I just kind of use my surface level research, and the economy is pretty strong, right?
Yeah.
And I mean, you kind of cancel out a lot of the noise around the labor market, and people are spending money, and that's still flowing through on these retail sales. And it was broad-based strength. It wasn't like, well, this one thing lifted the retail sales numbers. It was broad-based, and the only other major categories that saw declines were department stores, where sales were down 1%, and then building material and garden equipment and supplies dealers, that actually fell 2.3%. So, that kind of home improvement space, that's still struggling. We've seen a little bit more volatility to the numbers within that space, and some positive months, some negative months, but as a whole, it has still been a challenged sector there. Non-store retailers, oh gosh, people are loving the online shopping, and we didn't think it would continue on at this pace, I think, when we started talking about this a few years ago. But that was up actually 10.1% compared to last year. And this is really where I remain steadfast on the belief that the economy is okay. Food services and drinking places still saw impressive growth of 6.5%. We've said it many times, but I'll say it again. People will not go out to restaurants if they're worried about their paycheck, if they're worried about their finances. That is one of the most discretionary expenses and one of the first places people generally cut in a slowing economy.
And Chase, what worries me here too is that you see the reports, and when they do the surveys for people, oh yeah, I'm concerned, I'm worried, I'm not going to be spending. But when they get to that store, they go out, they spend. So they're saying one thing, how they feel, but when they actually go out, they actually do spend, and that's something important. And because of this report, this worries me that the Fed may have made a mistake and cut rates too quickly. I mean, that's a good retail sales, and if they overstep, that people don't realize the risk they run of overheating the economy and added pressure on inflation. Inflation can destroy an economy, and that's why we all figured that he would probably cut a quarter, but weren't sure after seeing that retail sales. Maybe he shouldn't. The market probably fell dramatically, but it's just I get a little bit worried about inflation because people are out there spending money and doing well.
Well, I mean, the big question is, a quarter point I don't think is going to have a material impact. The question is what happens going forward. And Powell used the term risk management cut when they cut rates. It wasn't the start of a cutting cycle, which
Right.
some people were kind of hoping that would be the language, but a risk management cut kind of tells me, things are still on the table that, maybe we don't get many more cuts. And the thing that's interesting is right now the numbers have it baked in. If you look at the Fed's dot plot, which is, the Federal Reserve members, both voters and non-voters, there's 19 members. What they think will happen through the remainder of this year, there's only 2 meetings left in October and December. Well, it was voted 10-9, essentially. There'd be 2 more cuts, while the remaining thought, I think, 1, maybe none. I don't know if there were some that thought none. But either way, it's a very tight, race. It's not like, 18 of them think we're going to have 2 cuts by the end of the year. And then the interesting thing is it gets even crazier when you go into 2026. I mean, some essentially have no cuts. Some have 4 cuts. Some have 3 cuts. I mean, we're all over the board of what's going to happen next year. If you take the median or the middle of Fed rate cuts next year, it's just 1 cut.
Right.
But again, it's all over the place. That policy is up for discussion.
And I think they really got to look at the data because I don't like predictions because you can't tell what the job report's going to be, the CPI is going to be, the PPI. If those come in as a surprise, that changes the whole thing. So I'm going to reserve and just wait to see what that data is before I see what happens.
They've been so off so many times on the annual basis, which, again, I don't want to throw it out because it gives you an idea of what they're thinking. But, the range next year essentially is you have 2 people that think rates could drop to as low as 2.5 to 2.75%. And you have 2 other people that think rates essentially would be pretty close to unchanged, just 1 cut. Those 2 people think 3.75 to 4. So as I said, it's all over the place. What's going to happen next year? I don't know. I think we know where President Trump lies. We did see his new Fed appointee, and He worries me a little bit, honestly.
And you know what? This is so important because the market is at lofty valuations, and if they say no, inflation's a problem, we're not going to cut, the market's going to tumble because it's way above where it should be, and all it takes is that bad news come in, and that's going to be a problem. That's why we're still cautious. I wouldn't be jumping in like, oh yeah, everything's great, and they're going to cut because data can change that. So we want to be careful.
And the only thing is, I think, we're going to get a new Fed governor next year. And I think you could have a lot of Fed cuts next year because you get a new governor. Mirren, the new guy, said he thinks rates should be around 2.75 to 3% by the end of this year. I mean, if Trump appoints another extreme dove, I mean, you're going to really start to tip the scales. And it doesn't mean you're going to have, I think, 5-6 cuts next year. But you probably push pace and maybe get 2-3 cuts next year if they are able to convey that message. I mean, now you got Waller, Bowman, Mirren, and a new Fed governor. So we'll see. But I don't think it's the right thing. Yeah. But that doesn't mean that's not what's going to happen if there are more doves on the Fed.
Right. And we got to move on. But it is something that worries me that they're too loosey-goosey to cut rates because President Trump wants that. And that's not the right thing to do. And you got to be more concerned on inflation because that will have a bigger problem longer term.
Potentially inflates the bubble further. Yeah.
Oh, and then you have to have rates rise dramatically. It's just a terrible situation. So hopefully they don't, fall to the pressure. But